I learned this lesson the hard way when it cost me real money. That's the only way the market ever teaches what really matters. Long before anyone knew my name or tried to simplify my ideas, I was just like every other trader, clever, impatient, and sure that being busy meant being smart. I believed if I just studied more, acted faster, and made better predictions, the market would pay me. It never did. What changed everything wasn't a new system, a secret signal, or some trick. It was alignment. That word might sound gentle, but in practice, it's ruthless. To align with the market, you first have to give up your own opinions. If you're serious about trading, hear this clearly from the start. The market doesn't need your ideas. It demands your obedience. Everything else is just noise. Before we go on, if you want to build this mindset, our new ebook, Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk, is linked below. Read it slowly, not for excitement, but for correction. It will take what you learn here and lock it into your trading DNA with real examples, clear frameworks, and hard-won wisdom from someone who made and lost fortunes until the lessons stuck. Now, let me tell you what alignment really means, because most traders get it completely wrong. They think it's about drawing a trend line, using a moving average, or labeling a market bull or bear. That's not alignment, that's just labeling. Alignment is an inner state that shows itself in your actions. It's when your timing, your position size, your patience, and your expectations all match exactly what the market is actually offering. No more, no less. The market is always speaking, but it speaks in probabilities, not promises. When I was young, I tried to force it to speak my language. I paid dearly for that arrogance. The first step toward alignment is accepting that the market is always right, even when it seems irrational, even when it humiliates you, even when it goes against everything you think you know. The tape doesn't argue, it reveals. If you're losing money, you are out of alignment. Not unlucky, not cursed, not early. Just out of alignment, and once you truly accept that, something strange happens. You stop trying to be right. You start trying to be in harmony. You begin to see that big money is never made from prediction, but from participation. I never built my fortune by guessing tops and bottoms. I built it by sitting tight when the market showed I was right, and getting out fast when it showed I was wrong. That sounds simple, and it is simple, but it's not easy, because alignment requires patience, and patience is the tool the market uses to break most traders. The market spends far more time doing nothing than doing something. Most people can't stand that. They need action to feel alive. So they create trades in dead conditions and call it a strategy. That's just misalignment disguised as effort. When you are aligned, you aren't busy. You are selective. You wait, and you wait without frustration, because waiting is part of the position. You understand the market has seasons just like nature. There are times to plant, times to harvest, and long winters where doing nothing is the highest form of intelligence. Alignment begins when you stop asking, "What can I trade today?" and start asking, "Is the market ready to reward risk right now?" Most days, the honest answer is no. The trader who can accept that answer without resentment has already separated himself from the crowd. Let me tell you about my early years, back when I was just a boy reading numbers in a brokerage in Boston. I thought I'd found something magical patterns in the way prices moved, and I did see patterns. That part was real. But I didn't yet understand the difference between seeing a pattern and knowing when that pattern mattered. I was trading on tiny movements, scraping for pennies here and there, convinced I was beating the game. I won often enough to feed my ego, but I wasn't aligned with anything except my own need to feel smart. The bucket shops eventually banned me because I was winning too consistently at their game. I thought that meant I'd mastered trading. It didn't. It meant I'd mastered their game, which was nothing like the real market. When I finally stepped into the legitimate exchanges with real capital, the market humbled me completely. All those little patterns I relied on meant nothing when real forces were at work. Accumulation, distribution, genuine sentiment, the movement of serious money. I lost everything, and that was the best thing that could have happened, because it forced me to learn what alignment actually meant. It meant waiting for conditions where the market itself was ready to move, not just where I thought I saw an opening. It meant understanding that most of the time the smartest thing to do was nothing at all. Just watch, just learn, just wait for the market to set up properly. This is what you need to understand. Your enemies in this game aren't other traders or market makers or some conspiracy. Your enemy is your own impatience. Your enemy is your need to feel productive when real productivity means waiting. Your enemy is your ego, which would rather be active and wrong than patient and right. The market will exploit every one of these weaknesses without mercy. And it should. That's its job. The market's job is to transfer money from the impatient to the patient, from the undisciplined to the disciplined, from those who fight to those who align. When I finally learned this, when I finally understood that my opinions were worthless and only the tape mattered, everything changed. I stopped trying to predict. I started observing. I would watch a stock for weeks, sometimes months, just studying its behavior. How did it act when the broader market was weak? How did it act when the market was strong? Where did buyers consistently step in? Where did sellers consistently appear? I was learning its personality, its rhythm, the way you might study a person before you trust them with something important. And then, when everything lined up, when the stock was acting right, when the broader market was favorable, when I could clearly see the path of least resistance, that's when I would strike. Not with my entire capital, but with a measured position, always protecting myself against being wrong. Because being aligned doesn't mean you're always right. It means you're positioned so that when you're right, you make significant money, and when you're wrong, you lose a manageable amount. This brings me to something critical that most traders never learn. Alignment is not a one-time achievement. You don't align once and stay aligned forever. The market is always changing, shifting, evolving. What worked yesterday might not work today. A stock that was being accumulated can shift to being distributed. A bullish market can turn cautious. Your job is to continuously read these changes and adjust, not based on fear or hope, but based on what the tape is telling you. I kept journals for years, detailed records of every trade, every observation, every mistake. This wasn't for nostalgia. This was training. I was training myself to recognize the subtle signs that appeared before major moves. I was learning to tell the difference between genuine strength and false strength, between real weakness and temporary shakeouts. The market repeats itself because human nature doesn't change. Fear and greed, hope and panic, these emotions have driven markets for centuries. Once you learn to recognize their fingerprints in the price action, you have an edge no indicator or system can copy. As your understanding deepens, you'll realize alignment isn't about following the crowd. It's about following the path of least resistance. The market moves in waves driven by human emotion, fear, greed, hope, regret. These forces don't change. Only the costumes do. When a market is aligned for a sustained move, it becomes obvious not to the public, but to those patient enough to watch without interference. Prices start to behave differently. Reactions become shallow, advances persist. Bad news gets absorbed. Good news accelerates. That's the market telling you, quietly but firmly, which direction it intends to go. Your job isn't to guess that message, but to wait until it's undeniable. Most traders want to be first. I learned long ago that being early is the same as being wrong. The The money is made by being right and staying right. Alignment means your ego steps aside so your account can grow. You stop trying to impress yourself with clever entries and start measuring success by how well you sit through discomfort in the direction of the major trend. This is where most people fail. They find the right direction, but they can't align their emotions with it. They take profits too early because they don't trust the market, or they hold losers too long because they don't trust themselves. Alignment requires trust built through discipline. You align your risk first, always. You decide how much you are willing to lose before you ever think about how much you might gain. That single act puts you in harmony with uncertainty, which is the market's natural state. When you respect risk, the market respects your capital. When you ignore it, the market educates you brutally. I've had fortunes vanish because I broke alignment with my own rules, not because the market changed, but because I did. Let me tell you about 1907. I had built a large position based on my reading, and I was right. The panic came, stocks collapsed, and I made a fortune shorting. But here's what nobody talks about. I almost didn't. Twice during the decline, I got scared. Twice, I almost covered my shorts because the bounces were so violent, so convincing, that I doubted my analysis. But I had learned by then to check my emotions against the tape. The tape still showed distribution. The rallies were being sold into. The path of least resistance was still down, so I held. I sat through the discomfort and let the alignment play out. That trade taught me something deep. The market will always test your conviction, always. It will create exactly the conditions designed to shake you out of good positions. If you're in alignment, if your analysis is based on solid observation, not wishful thinking, you can withstand these tests. You don't need to be comfortable. You need to be correct, and correctness comes from alignment, not confidence. I've seen it happen countless times. A trader gets a good read, takes a position, and then the market does what it always does. It wiggles, tests levels, creates doubt. If you're not truly aligned, if you're just gambling on a hunch, you'll get scared out right before the big move happens. But if you've done your work, if you understand why you're in the trade and what you're waiting for, you can weather those tests. I developed what I called pivotal points, price levels, where, if a stock crossed them with volume and conviction, it would likely continue in that direction for a big move. Finding these points became an obsession. It meant understanding the stock's entire history, its patterns over months and years where it had met resistance or found support in different conditions. When a stock broke through a pivotal point convincingly, that was the market shouting, "This is the direction, this is where we're going." That's pure alignment. You're not predicting. You're confirming and acting on what the market is clearly showing you. But here's where most traders destroy themselves. They confuse activity with productivity. They think making a lot of trades means they're working hard, that they'll succeed through sheer effort. That's not how this works. In fact, overtrading is one of the fastest ways to ruin your account. Every trade has costs, not just commissions, but emotional cost, mental cost, opportunity cost. When you're constantly in and out, you don't give yourself the space to think clearly, to observe properly, to wait for true alignment. I learned to think of my capital as ammunition in a war. You don't fire every bullet at the first sign of movement. You wait for a clear shot at a target worth hitting, and when you do fire, you make it count. The best trades I ever made were the ones where I waited weeks for the setup, studied every angle, confirmed my thesis again and again, and then committed real capital when everything aligned perfectly. Those trades made me more money than 100 small, scattered positions ever could have. Risk management is the foundation of alignment. You can be perfectly aligned with the market and still be wrong. A sudden news event, an unexpected shift, anything can turn a good trade against you. That's why you never risk everything on one idea. My iron rule was simple: never let one trade destroy you. Use stop losses not out of fear, but as tools of intelligence. When the market tells you you're wrong, accept it and move on. The market doesn't care about your hope or your need to be right. It's not the thinking that makes the money, it's the sitting. Let me explain. Once you've taken a position in a true trend, your job is to sit tight. Let it develop. Most traders exit too early because they can't stand seeing profits fluctuate. But if the trend is genuine and conditions haven't changed, your patience will be rewarded in ways you can't imagine when you first enter. I once held cotton for months during a powerful bull market. Every day someone urged me to take profits, but the tape showed strength, shallow pullbacks, strong buying, so I sat. That trade became one of my best. Sitting is harder than it sounds. It requires ignoring noise, others' opinions, and your own fear. You must trust your analysis until the market clearly tells you the story has changed. Most traders can't do this. They need to feel active, so they exit winners too early and chase mediocre setups. They're always moving but never getting anywhere. The market speaks through price and volume. Price shows you the battleground, where bulls and bears fight, where support and resistance lie. Volume tells you the conviction behind the move. A breakout on heavy volume is the market shouting. A rally on light volume is a whisper, likely to fail. Learn to distinguish the two. The tape doesn't lie. It's the pure expression of supply and demand, stripped of all stories and opinions. I never listened to tips or so-called experts. When talk and tape conflicted, the tape was always right. Here's the part many want to skip. Alignment isn't permanent. It must be reestablished constantly. Every winning streak tempts you to overstep. Every losing streak tempts you to abandon your process. The market is human nature amplified. To stay aligned, you must reduce yourself, your opinions, your predictions, your need to be involved. My greatest trades weren't when I felt smartest, but when I felt most detached. I saw the condition, took the position, and waited. No drama, just obedience to what unfolded. This is the paradox. The more you try to extract money, the less the market gives you. The more you focus on alignment, on behaving correctly regardless of outcome, the more consistently profits appear. You let profits take care of themselves. You create conditions where they have no choice but to come to you. Let me be personal. After my fortune in 1929, I lost everything, not because the market changed, but because I stopped being aligned. Success made me arrogant. I thought I was smarter than the market. I traded ego, not evidence. I held losing positions because I couldn't admit I was wrong. I listened to my press clippings instead of the tape. The market, patient teacher that it is, took everything back. That loss taught me more than all my wins. Alignment isn't a destination, it's a daily practice. Each morning, ask yourself, am I aligned with the market today, or with my ego? Am I reading the tape or my hopes? The market will always test you. It will give you wins to make you reckless and losses to make you doubt. The traders who survive pass these tests by staying aligned. They don't get high on wins or low on losses. They observe, adjust, and follow. When you're truly aligned, trading becomes almost mechanical. You have clear entry criteria, exit rules, position sizing, and stops. It's not based on emotion. It's based on what the market shows you. This structure frees you from the emotional torture that destroys most traders. You're not hoping or fighting. You're responding to signals. Real discipline isn't about forcing yourself to follow rules you don't believe in. It's aligning your rules with reality so completely that following them feels natural. When you understand the market rewards patience and punishes ego, patience becomes obvious. When you understand trends reward those who ride them, sitting tight becomes intelligent. Look at your own trading. How much of your activity is truly aligned with what the market is offering? How much is just noise? Action taken out of boredom, anxiety, or revenge? Be honest, most traders would admit less than half their trades are fully aligned. The rest is expensive noise. What if, starting today, you only took trades where alignment is obvious, where the setup is clear, risk is defined, and the path of least resistance is undeniable? You'd trade less, but you'd make more. Your win rate would improve. Your average win would grow. Your mind would calm. Alignment doesn't make trading exciting. It makes it effective. The market rewards endurance, not excitement. Think of a lion. It doesn't chase every antelope. It waits, conserves energy, and strikes only when the opportunity is right. That's alignment. That's efficiency. If you remember one thing, remember this. The market is not a puzzle to solve, but a force to align with. Your job isn't to conquer it, but to cooperate with it. When you understand that, trading stops being a battle and becomes a practice, a quiet, demanding, personal practice. In that silence, fortunes are made, not quickly, not easily, but correctly. If this resonates, tell me in the comments, what part of your trading feels most out of alignment right now? Is it patience, risk management, sitting with winners? Awareness is the first step toward correction. We're building a community committed to doing this the right way, the aligned way. Explore the other videos here. They're a progression, each reinforcing the same core truth from a different angle. Study them. Let them change how you think. And take the ebook in the description seriously, thinking like Jesse Livermore. Don't write it for a day's inspiration. Read it to be changed for life. It's everything I've learned, paid for with millions in losses and gains, distilled into practical wisdom. Align yourself with the market. Stop demanding it serve you. Stop forcing action when it wants to rest. Stop predicting when you should be observing. Stop being clever when you should be patient. When you learn to listen, wait, and act only when conditions demand it, you'll discover the great secret every successful trader learns. When you're truly aligned, profits don't need to be chased. They find you because you're positioned correctly. They find you because you've removed the obstacles, your ego, your impatience, your need to be right. Once you experience true alignment, you'll never want to trade any other way. The market will always be here, creating opportunities, testing participants, rewarding discipline, punishing recklessness. Will you be aligned when your opportunity comes? Will you have the patience to wait, the discipline to act, the wisdom to let it run? I've given you what I know. The rest is up to you. Use it, test it, prove it in your own experience. And when you do, come back and share your story. Help the next trader struggling as you once did. We build something lasting not through secrets, but through shared wisdom, through the hard truths that work, through the discipline to align with reality instead of fighting it. Now go study the tape, wait for your moment, and when it comes, act with conviction. The market is the greatest game ever invented. And you've just learned its most important rule.